Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Tesla's chair denied a report that said board members started a search for a CEO to succeed Elon Musk, saying directors are, quote, highly confident in his abilities.
All right. At the same time, as Elon has promised to spend more time at his company, Musk will maintain a presence in the White House in the president's inner circle and will continue to work on the initiative from his micro office in the West Wing. Both of those stories are among the most read on the Bloomberg. Let's get to it. Lots to cover. Bloomberg News senior reporter Jennifer Delowy is with us. She is at the White House, also here in studio. Bloomberg Businessweek columnist Max Chafkin, co-host of the Elon podcast, Elon Inc. podcast, and the author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power.
Max is in our macro office, not our micro office.
Our macro studio.
Yeah.
Max is going to come in just a moment. Jen, we got to start with you. You talked with Elon along with some other reporters, set the scene, the chat yesterday, what you all asked about, and what he said.
Well, I mean, this was really a remarkable opportunity, remarkable because we haven't had many of them, to hear directly from Elon Musk as he discusses his government role. Of course, he's been at, cabinet meetings, he's been in the Oval Office and spoken to reporters occasionally. But in this moment in the Roosevelt Room with other reporters, he was really opening up much more about what he's done over the last 100 or so days, leading the DOGE effort, the Department of Government Efficiency program that he's been running for President Trump. And, he spoke quite colorfully about, the experience, not just the $160 billion in government savings that he says he's been able to root out with this program and cut. He told us about flying on Air Force One, about staying in the Lincoln bedroom at the president's request, and even tucking into, ice cream from the White House fridge. So it was really remarkable. It told us a lot about, I think, his access to the president, about his status really in Trump's orbit, even as he is making this retreat from the White House.
Well, Jennifer, on that retreat, investors cheered the news last week in Tesla that he would be spending more time away from Washington, D.C. Now we're hearing he'll have this micro office. What can you tell us about how much time he will be in D.C. or how much time he'll be spending on DOGE? Moving forward.
Right. He told us that he anticipates spending about 1 to 2 days a week on average, and coming into Washington, D.C. basically once every other week. So you could see a situation where he's in town for 3 days working and then comes back a couple weeks later. This is, of course, a marked contrast from the beginning of the term when, it was an all hands on deck situation, really intense, as he described it. And he would spend, 7 days a week here sometimes. Working just to get into these agencies and start figuring out a plan for accessing data and examining their spending.
Max, I want to bring you in. You're listening to Jen talk about this conversation, kind of him talking about his time in the White House. And I think we were all glued to the cabinet meeting where he had the two hats on, took them off, and he got kind of serious, it felt like.
Yeah, tonally kind of a valedictory tone. I don't know. The messaging is a little bit confusing because on one hand, he's saying, taking steps back. On the other hand, 1 to 2 days a week is that's a lot of days.
Right.
This is a guy who is running simultaneously 5 companies. He's got a lot of responsibilities, even if he is, as Jen says, scaling down from spending like all his time in Washington and spending a significant chunk of time in Washington.
Yeah. So on that, Jennifer, the timing that he's doing here, also the figures of $160 billion, I think, getting a lot of attention, especially earlier this year when, or maybe even a few months ago, when we heard that $2 trillion was his goal of cutting from the government. Have we learned if that goal was over a 10-year period, over a 5-year period, or how the $160 billion sort of fits into that goal, or if that goal has changed?
What we do know is that the ambition is clearly being ratcheted downward. And while he is not willing to forego reaching, a $1 trillion target, he wouldn't rule that out completely. He did say that doing so on any basis would require a lot of, willpower from elected officials, and he's just not sure that the willpower is there. He wouldn't rule it out, but it did seem very much like a concession that he's gotten a lot of the easier, lower hanging fruit, and that this is hard to do on an enduring basis. And by the way, I'll just say on his time here, he is limited as a special government employee to 130 days of service per calendar year.
And it was $2 trillion, in fact, was his original claim, and that was an annual number. That's the budget deficit. When he was at Madison Square Garden before the election, Howard Lutnick asked him how much he was going to cut the deficit. He said easily $2 trillion or something along those lines. So it's a huge difference and really an unusual, just for Elon Musk. This is somebody who is kind of used to projecting dominance, who just tends to go from victory to victory to victory. This is a come down. I mean, and he's doing his best. And I think that's part of why you're seeing these media availabilities, this effort to, to actually have a voice in the story, because it's a failure, at least in the terms that he set for what he was trying to do.
Jen, before we let you go, I mean, should we assume that Elon will still have a voice or have the president's ear ongoing, even though he maybe isn't physically at the White House? There are limitations, right? How many days he can serve the government in this capacity, that he will still pick up the phone, the president will still pick up the phone, there will be that constant communication, or has something changed in that relationship?
There's all the indications are that he will continue to have this status around the president. I mean, he's clearly had altercations and disagreements with members of the administration, and it is perhaps one of the only folks who can do that right now. He's, as we noted at the top of this conversation, he's got a micro office in the West Wing of the White House, and he's not giving that up. Office space in this building is pretty difficult to come by, and that alone is an indication of the fact that he has stature with the president, and that seems to be enduring.
Did we figure out what a micro office is?
It's like an office, but smaller.
What is that?
I don't know. That's just what I'm guessing.
Does he have to share desks? That's kind of a thing nowadays. I know. All right, Jen, incredible reporting. So appreciate it. Jen Deloy, senior reporter at Bloomberg News there at the White House. We're going to stay with Max, though. Max,
I wanted to follow up on one thing that you said about the status as a special government employee, because you talk about this a lot on the Elon Inc. podcast. Yeah. How is that defined if he's planning on spending 1 or 2 days a week still?
I mean, yeah.
Does that violate that status? How does that work?
It's my guess is the accounting here is probably a little bit fuzzy. It's 130 work days. Like, I don't know if Elon Musk he has been staying here, as Jen was saying, weeks at a time, essentially, in Donald Trump's orbit. Now, he's also been, of course, attending SpaceX meetings,
he's
attending
played
Tesla.
Video games from his West Wing office. If you're playing video games in the office, does it count as work? I don't know. I don't know. Does it count as a work day? I don't know.
My suspicion...
Does it count as work when you play video games at the office?
I never play video games at the office.
Sorry.
My suspicion, I mean, taking it down from semi-full-time or whatever he was to 1 to 2 days a week, what I think that does is two things. One is it allows him to tell Tesla shareholders, hey, I'm not distracted. The second thing is it probably gives them a little bit of flexibility as far as like not going over that 130 days. I have to think that he's going to have as much time in the White House with Donald Trump as he wants, and the administration will figure out a way to account for his time so that it's not breaking the law.
Because the president likes this relationship, pretty cool, and also because of Elon's deep pockets.
Yeah, I mean, he is a really important. I mean, there's a lot of ink has been spilled about the sort of popularity of DOGE and the lack thereof. The fact that making these cuts has not, in addition to falling well short of the claims of deficit reduction, this has been very unpopular. On the other hand, Trump really needs Elon Musk. He is the most important donor on the Republican side right now. He's going to be key if the Republicans want to do well in the midterms. And, as Trump looks forward to his legacy, 2028, who the candidate's going to be, that person is going to need Elon Musk in their corner.
Can we ask about...
You're going there?
Yeah.
Go there,
Does
please.
Elon have to be worried about the Tesla board replacing him? I mean, the board chair has come out and said, nope. But we had another bad data point for Tesla out of France. So I'm just curious, does he really have to be worried?
So this report, you're referring to the Wall Street Journal
Yes.
report that the board had contacted executive search firms. If we're talking about a normal company, this would be nothing, right? The fact that the stock's been all over the place, he's clearly distracted. Of course they'd be talking to other companies. And what makes this crazy and what makes the board's denial not that surprising is the board has been so behind Elon Musk for years. And, this is the same board who has been fighting in court to pay him like the largest bonus, in history, despite the fact that Tesla's stock price has been very iffy. So the board, is very much still in Elon Musk's corner. If you look at the makeup of the board, you're looking at his brother, people he has close relationships to. So I think, a couple of things are possible here, assuming that the journal's sources are legit, which I do, is that, there may be some opponent on the board who's been talking to search firms, or perhaps this is somebody on the board trying to send a message to Elon Musk, trying to get through to him saying, hey, this is real. We need you to be involved. But in any case, I wouldn't expect him to be leaving as CEO anytime soon. If he were to leave, the stock price would be in trouble, be my prediction.
Some other members of the board, you mentioned Elon's brother, Kimball Musk, on the board. He's been on the board for 21 years. You've got James Murdoch, who's been on the board for close to 8 years. Jeff Straubel, who's been on the board for 2 years. And then Joe Gebbia, among others, including Kathleen Wilson-Thompson as well. Robin Denholm, the chair of the board, we should note. Max, before we let you go, why do you think, are we still at a point where Elon is so closely tied to Tesla and Tesla's future? Because couldn't some investors or perhaps even institutional investors see this as like, wait a second, this could actually be a positive sign for Tesla because it would help get it beyond the, being inextricably bound to politics? Yeah,
if you talk to investors, you do hear that view, but it's very much a minority view. And the reason it's a minority view, I'm saying among Tesla investors, not necessarily among outside observers, is because the valuation of Tesla right now is very much not about its automotive ambitions. So if you replaced Elon Musk with a normal CEO, what you have is a car company. But many of Tesla's investors don't want to have a car company. They want to have an AI company. Yeah. And it's not clear who runs that company, who can sell that story.
Musk has got an AI company.
A second one.
He does. He's got XAI.
Absolutely. But Musk has told this story about driverless taxis and the Optimus robot. That's a humanoid robot. And when you look at the bullish valuations, if you listen to the bulls, they are not counting on the Model 3 or the Model Y, the Tesla's kind of normal cars, which are very successful in their own terms. They're expecting this entirely new AI-driven revenue stream, which really mostly just exists in Elon Musk's head. And if you take Elon Musk out of the equation, how do you do that model? It becomes harder. And people, you're laughing, but Elon Musk has achieved impressive things. And from the point of view of the investors, if anyone can do it, he can.
And laughing, but I feel like they're investing in Elon, right? And all that, all the craziness and all the innovation that comes with him. It's pretty cool
that's
stuff.
how it goes.
Thank you, Max Chafkin. Thank you so much. Bloomberg Businessweek columnist Max Chafkin, co-host of the Elon Inc. podcast, and as we remind you, author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
On the retail side, I want to bring in Poonam Goyal, senior analyst for e-commerce, athleisure, off-price retail for Bloomberg Intelligence. She joins us from New York City this afternoon. Let's talk about this miss when it comes to second quarter operating income, the outlook there. Is that a result of tariffs in your view?
It has to be, because when I think about the operating margin that they just posted with AWS, incredible, near 40%, the downside that we're seeing going into 2Q, I can't think of anything else that could be driving that than higher costs that they'll have to absorb due to the tariffs.
Are you surprised that, we kind of, went through that press release. There's really nothing on tariffs. There's that disclosure that kind of dumps everything at the very bottom of the page. Not surprising to see that they didn't really address it in the release. And I guess it's all going to come out on the call.
Yeah, I think there's going to be a lot of questions about tariffs. Keep in mind that, Amazon is directly exposed on the 1P side. So roughly 40% of its business is where they do have to deal with tariffs. The other 60%, that's 3P, the sellers have to deal with them. But Amazon helps you set the price on its platform to make it competitive. So there's just a lot of back and forth that's going on. And with some suppliers, they are working one-on-one to see where they can help offset the price increases. But the biggest delta between 1Q and 2Q is tariffs. So the guidance that we see here has to be a result of that wide net that they've casted.
You mentioned the P's.
What are you
Translate
talking
for
about?
us.
Sure, third party and first party. So first
okay.
party is when Amazon owns the goods. So basically they take on the cost. And they directly source it from the supplier. Third party is if you and I go onto Amazon and we start selling stuff.
What's the breakdown in terms of actual goods that are sold third party versus first party?
Sure. Third party we estimate is about 65%, and first party is about 35 to 40%. So
Okay.
It's 64.
And is there more, like third party is more from China, or do we not know, than first party?
Well, Amazon doesn't tell you how much they get from China, but just by looking at what's on their platforms and third-party data, irrespective third-party or first-party, it's estimated that over 70% of what's sold on the Amazon.com platform is from China. So it's a large, large, large piece of their marketplace.
And just to remind everybody, I mean, you study e-commerce, athleisure, off-price retail. This is your world. This stuff is made overseas. Like very little of it is made here in the U.S.
Very little. I mean, food is the only thing we may procure locally that Amazon sells, really. Everything else, the bulk of what you buy in retail in the U.S. is made outside of the U.S. It doesn't matter who you are.
What?
I don't know.
Okay. I'll let him have a moment. You know what's interesting, Poonam? We kind of just laugh that normally when we're talking Amazon, we're all over Amazon Web Services. And it's like, oh, yeah, that retail business. So what an interesting kind of report to go through and what we're focusing on. I do want to point out, though, that AWS reported first quarter sales gained 17% to $29.3 billion, in line with analyst estimates. It was the unit's slowest growth in a year. So it does feel like, I don't know, like, what do we get out of that?
I think it's okay. I mean,
Okay.
we're going to see businesses pull forward spend, pull back on spend. There's still a lot of momentum here on the AWS side. And really, while the sales were just in line, the margin was incredible. 39% operating margins, 39.5% roughly. That's huge. Consensus is looking for about 35%. So we do think, this business will ebb and flow. And you'll have high margins, you'll have low margins depending on where they invest. But the long-term potential of AWS is still pretty sizable, and there's a long runway here.
Okay, so if we think about this in the context of what we've heard from other companies thus far, what we heard from Microsoft yesterday, and as a reminder, I mean, you cover the e-commerce, the athleisure, the off-price retail. How do you think about this in terms of the retail world, like the Walmarts of the world, the Targets of the world? How does this report sort of inform the way we should be thinking about, and investors should be thinking about those other companies?
I think if Amazon's facing these tariff headwinds, so is everyone else, including Walmart, including smaller companies, medium-sized companies. And really, there is no escape from this. Unless we see things calm from here, the 145% tariff that you see on China is sizable.
Yeah.
And if that stays that way, the consumer is going to be paying higher prices. We will see some out of stocks on shelves in the coming months, as most companies have halted shipments from China. And it's not going to be an overnight switch to take everything that you make in China to somewhere else.
Or even impossible for some things, some analysts have said. Well, you said empty shelves. Right. Where are we going to see them? What do you think we'll see empty?
I saw empty shelves, but in like a drugstore, but I don't know.
That's because everybody stole everything there, Carol.
I know.
Come on, don't you know how this works?
I know it's always a little war perspective. Go ahead, Poonam. Sorry.
Well, you won't see empty shelves on Amazon, but you will see out of stocks. In fact, I was just browsing the web randomly, and I started to see some things that just said out of stock, like we'll let you know when it comes back. So I think you'll start to see inventory, especially that comes out of China, be put on hold. And we don't know when it'll come back, because unless you raise the prices or double them, you're not making the same margin on them.
What's the consumer's willingness to pay for this stuff? Because as I was mentioning to Caroline, if we see these price increases across the board, if we see them at Target, if we see them at Walmart, it's not like this is an Amazon-specific story. We're going to see this everywhere. At what point does the consumer throw in the towel and say, I'm not going to do this, I'm not going to pay?
I think the consumer will say, I'm not going to pay when prices go up 30, 40%, right? It's going to get more expensive. And if they say they don't pay, it means before they bought 10 things, now they'll buy 3 things. Where are they buying those 3 things? Are they going to trade down from a national brand to a private brand? Are they going to buy more staples that they can, like staple colors that they can reuse, recycle, rewear, and wear less fashion that goes out of style quickly? There's going to be trade-offs if prices rise materially. That said, we do think that, people will just switch brands, they'll switch options where they can get things cheaper. We're going into the back half in just a few months, and that's the peak selling season of retail. When you think about toys specifically, right, for the holidays, when you think of back to school, I mean, what do you get your kids if you're not going to get them the Barbie and you're not going to pay,
Can only get them 2 Barbies.
Not 30 Barbies, Carol.
Only 2 dolls, apparently.
2 dolls.
Right.
Sorry. No, I'm just repeating, what we've heard. Hey, one last question. I will say, though, with the Amazon cart, like when you put them in and like you automatically see the value, like if things start to get more expensive, like you might pull back. 30 seconds, top question you think must be asked on the Amazon call.
How are we weathering this tariff storm that we're going into, especially, with 3P sellers? How are they going to control that Amazon is still an attractive place where value is seen because they don't have a control on prices for everything?
All right, going to leave it there. Hey, Poonam, thank you so much. Super good conversation. Poonam Goyal, Senior Analyst for E-commerce, Athleisure, Off-Price Retail for Bloomberg Intelligence.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Ed Ludlow still with us too, of course, co-host of Bloomberg Technology. And we want to bring into the fold Mark Gurman back with us, managing editor for Global Consumer Tech out there in our San Francisco bureau. All right, so Apple down about 2.7%. Mark, we know you really are interested mostly in the call, but the numbers are out. What, if anything, is of interest here or you think is notable?
I mean, overall revenue is up 5% year over year, so obviously that's a good thing. You saw iPhone sales beat slightly expectations from Wall Street, so that's a good thing. It shows some solid momentum for the iPhone 16e. Notice that Tim Cook mentioned the 16e in particular versus the Pro models, which generate the most amount of revenue for Apple, obviously. Mac did a little bit better than expected, iPad better than expected, but we saw some softness on China, services, as well as wearables, home, and accessories. Wearables, home, and accessories, the softness there continues. It's been this way for several quarters. That's sort of surprising, given the momentum that we've seen in the past on the Apple Watch and the AirPods and some of those peripheral products. Services still pretty considerable double-digit growth, but not at the same level that Wall Street was anticipating. Services in particular is quite interesting because that's going to probably be a real headwind for Apple in the coming years now that they're needing to adjust some of their App Store policies in relation to commissions. And then, of course, we have the Google search deal overhanging all of this stuff. That's a double-digit billion-dollar annual revenue stream for Apple that may also go away depending on where the U.S. government goes with this trial against Google. A lack
of commentary, though, and maybe we'll get it on the call. I know you're looking for it, about supply chains and about tariffs. Do you think that's why investors are sending shares down ahead of this call?
No, I think it's because of the continued softness in China in particular. Obviously, China's Apple's third biggest market. China really swings the pendulum here when it comes to Apple shares going up or down on earnings calls. And in this case, we're at an annual decline, certainly an annual decline compared to where Apple was 2 years ago in China this time around. And then missing Wall Street expectations by about $500 million. So definitely not a good sign for Apple in China. And I think investors, or at least those analysts on the call, are going to have a lot of questions about that. But I hope they do dig into tariffs as much as possible.
Hey, Mark, I just want to go to the iPhone beat, because like it all comes back to the iPhone sometimes, right? 46.84 billion. Estimate was 45.94. The third-party data showed a lot of consumer electronics flying around the planet in the first 3 months of this year. Do you see any sort of evidence just from the pure number that this was people buying handsets front-running tariffs in anticipation that maybe prices might go up in the future?
I don't think the front running of purchases to avoid price hikes in the future really happened until, late April, when that's already within Apple's third quarter. So no, I don't think that any of the iPhone sales numbers that we're seeing here really were influenced by people trying to get ahead of tariff price hikes. I mean, Trump made his announcement in early April, and this was not really in the public consciousness until then, which again is the start of the third quarter for Apple. So I think the impact there will be in the current quarter, and I'm looking forward to hearing any guidance that Apple gives on the call, which may give us a taste of how the iPhone's going to do in this current period.
Mark, well, go ahead, Carol.
What do you think they're going to say in terms of price increases? It's something you gave us a heads up on earlier, in terms of margins, impact, and then price increases, in this tariff-filled environment. So do you think we'll get any kind of clarity or specifics on that?
So if I was a betting man, at least one analyst is going to ask about the potential for price increases. And if I remained a betting man, I would say Tim Cook would say, we'll see, nothing to announce today. And then maybe, if we're lucky, talk about how they think about these types of things.
How does Apple do price increases?
Well, they really don't. I mean, the iPhone price has been stagnant for the most part. There are some exemptions over the past, 7, 8, 9 years. So they really don't do price increases. And so when they do make the price increase, they're going to do it from a position of strength. They're going to focus on installment plans. They're going to focus on carrier deals, and they're going to focus on the technologies that they've implemented over the last decade to make the iPhone more valuable. They're going to talk about how useful the phone is, how it's equivalent to X number of cups of coffees a year, etc. And they're definitely not going to mention tariffs as a reason, because they saw what that did to Amazon the other day.
All right. Well said. Looking forward to your reporting after the call as well. Mark Gurman, managing editor for Global Consumer Tech, Bloomberg News out there in our San Francisco bureau. So Ed, just got about 30 seconds here. I mean, what are you thinking about? Is it just, again, tariffs for Apple or Amazon? I don't know.
Yeah, to Mark's point, if it wasn't that front running on the iPhone, then what was the beat? Are people still in love with the iPhone? I think that's a really basic question. But again, all we've got to go off on right now is that we noticed that Apple added the word trade.
Right.
One single word to the boilerplate in the forward guidance or financial disclosures disclaimer. And
both of them, right?
I'm surprised Apple didn't have that in there already, given what we knew about this administration and the way that those risks are listed.
Given that they've had a global supply chain, the iconic
they know what happened in
global
2017 too. Yeah. But hey.
Ed Ludlow, thank you so much.
Never a dull moment.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Also out with an update, Eli Lilly. Shares falling as much as 12% earlier in the session. The biggest intraday drop going back to October. Shares now down 10.5%. This after CVS announced a plan to drop its blockbuster weight loss drug Zepbound from its preferred list, making rival Wegovy more widely available. Madison Muller is Bloomberg News health reporter. She joins us here in the Bloomberg Interactive Brokers studio. So Lilly maintained its sales guidance. Zepbound performed in line with Wall Street's expectations, but investors who've been hoping for more explosive growth were underwhelmed. Are we seeing price wars here?
Yeah, that is what is definitely starting to happen here. I mean, coming on the heels of the news that we discussed earlier this week, which was that Novo Nordisk was partnering or working with some telehealth companies to distribute distribute pens of its blockbuster drug Wegovy at a lower cost. And now we're seeing Novo partner with CVS retail pharmacies and CVS's drug benefits manager unit to provide more cost savings for patients and for health plans that cover weight loss drugs. So it's definitely heating up.
Is it just negotiating, or is it, I mean, we've talked with you too that they're similar drugs, but they're not all exactly the same. So I'm just a little curious about how that factors in.
Yeah, I mean, that is part of the interesting thing. I mean, Lilly has said, and they were saying today, that the price of the medication they purposefully priced it lower. I mean, for competitive reasons, it came onto the market after Novo Nordisk's drug. Lilly's drug Zepbound is a little bit more effective, but both drugs work really well for weight loss. Lilly's drug costs around $1,000 a month, while Novo's is about $1,300 a month. But the higher list prices mean that drug makers, when they're negotiating with these PBMs, can provide greater discounts, bigger rebates. So in some ways, it actually turns out to be a benefit when they're at the negotiating table. But that's one of the things, and we were talking about this earlier, there's not a lot of clarity about how these negotiations work, what happens behind the scenes, and that's not something that we're probably going to get anytime soon.
So is today's stock move all about this CVS news?
Yeah, I mean, in part, I think it sort of compounded the underwhelming results that you mentioned earlier. I mean, it was a good quarter for Lilly, but their expectations for this company are so high now that they just can't really afford to have a inline quarter. Investors were looking for more growth and looking for Zepbound sales that sort of smash past estimates like they did last year, and that's just not what happened. So it was just a little bit disappointing, I think. And then seeing the CVS news, it was interesting because CVS and Lilly both reported earnings today, so we sort of got to see this happen in real time.
All right. So, I mean, I don't know. Can this change? I mean, how much of it is about the GLP-1 still for Lilly? Like we always talk about the pipeline and other things.
It's like more than a $700 billion company at this point.
Yeah.
This is huge.
So help us put this in perspective.
I mean, and that valuation is really about weight loss drugs. But the thing is, Lilly's, like you just mentioned, their pipeline, people are so excited about Lilly's pipeline because not only do they have Zepbound, which is, like we said earlier, a little bit more effective, but they also have a weight loss pill that's coming pretty soon, as early as 2026, the CEO has said. And that is thought to be the next big thing in this market. They are far ahead of the competition when it comes to that, and they're going to continue to sort of dominate the space.
So can I just ask one follow in terms of the PBMs and negotiating? So if they come out with a pill, is that a whole separate negotiation because it's a different form of delivery versus an injection?
Yeah, I mean, that is the question. I mean, the thought is that the pills will be priced lower to begin with because they're easier to manufacture. Pills are typically a little bit cheaper. But Novo has a pill on the market right now called Rybelsus that doesn't work as well for weight loss, but it's around the same price as Ozempic. So it sort of is to be determined what will happen with the pricing war, but the expectation is that it will be a little bit cheaper. On
pricing, you and the team out with a story about a price war here, reminding us that Novo reached a deal with Hims & Hers this week, along with 2 other telehealth medicine providers, for a month's supply starting at $499. This is of Wegovy before subscription fees. Lilly announcing an expanded partnership with Weight Watchers on April 29th. How low is this price going to go?
That's the question. I mean, and I think that's what investors were worried about today.
Because price war is great for consumers.
Exactly.
Not good for investors, not good for companies.
And we've seen these companies get, and we say in the story, publicly lambasted for the prices of their drugs. I mean, Bernie Sanders called the CEO of Novo Nordisk into a hearing last year and really railed him on the price of these medications. And they are bringing the prices down, and they are expanding accessibility options, affordability options for patients. But I think investors were concerned what this means for Lilly. Are they going to lose out on share because of this?
Where is it manufactured? Is it all here so far?
They do. Their supply chains are sort of all over the place. Novo makes some of the drug here. They do. They make some in Denmark. Same with Lilly. The first step happens in Ireland. A lot more happens here. So they are also potentially exposed to tariffs.
Madison Muller, the best health reporter here at Bloomberg News. Check her out on the Bloomberg.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. About 18 minutes to go until we wrap up the trade on this first trading day of May 1st, 2025. Charlie just breaking down the numbers along with Jordan, and you can see that, up about 1% on the S&P 500, off our best levels of the session. And you've got really those big tech names continuing to push the NASDAQ 100 higher, up about 1.6%. In particular, Meta and Microsoft, we talked about it earlier. After the close, we get the A's of the Mag 7.
Airbnb.
No.
Amgen.
No.
Oh, no?
No.
Oh, okay.
Funny how that works.
Apple and Amazon. That's what you're talking about. Okay.
Exactly.
Okay. Hey, let's see what Max Wasserman has to say about this. He's founder and senior portfolio manager at Miramar Capital. Max, I don't want to talk about these individual names with you. We're going to have plenty on that in just a few minutes. I want to hear your thoughts on the macro environment right now, given that we've seen such a rally over the last few days. Hard to believe that April ended the way it did, given the selling that we saw in the first part of the month.
Yeah, it's great to be here. It's fascinating to see all the turmoil that's taking place in the marketplace based on commentary out of the White House. But if you look behind that and you look at what's happening in the economy, we are seeing signs of the economy slowing down, and you're still seeing embedded inflation. So the question becomes, will the Fed take that embedded inflation and hold off? Will it look at the tariffs as a transitory inflation that can be that needs to be dealt with, or can just leave it alone? But we see the economy slowing down. We see the consumer eventually being hurt by that. And if the tariffs, again, it's hard to handicap that because he keeps making exceptions all the time, right? I mean, you just heard the latest thing about Iran with oil. So it becomes very challenging. But we think this market is slowing down, and we think the consumer is going to be hurt by that. And we think the market needs to reflect that. And we think it is for the most part, but there's areas of pockets where technology, they're still gravitating to that right now.
Hey, do you feel like with conviction, Max, that you can say, okay, this is our market for the rest of 2025, or it could change dramatically for the better, for the worse?
Yeah, I don't think you can do conviction for an afternoon with this White House. I mean, every single time you hear about a tariff, you hear an exception. And you're going to hear that tonight. It's going to be interesting to hear from the two companies this evening. But not even mentioning names, one of the companies gets 70% of their products that they sell to America is from China. So that has to be inflationary unless they get an exemption. But the question becomes planning or investing. You have to really take a long-term look and not trade this short-term because the information's changing by the hour. But we do see good companies out there that have been hit hard that, you know, over 6, 12, 18 months should be in good investments, paying you good dividends. So we like that. But just short term, you know, fasten your seatbelt, and they say, and put the trays in the upright position, because it all depends on what the White House says. And then next week, what does the Fed say about this?
Max, you can name names if you want. You feel free to. Yeah.
Sure. I mean, it's interesting to see what is Amazon going to say.
Yeah.
70% of their goods are coming from China, basically, over 2.5 times what they sell from here.
Well,
so what kind of inflation is that going to be?
We also,
and how are they going to handle it?
I think it'll be under an extra microscope given what we heard earlier this week after that Punchbowl News report, sort of the back and forth from the White House about what ended up happening or what, you know, a call between Bezos and the president regarding being transparent about those prices and where that's coming from. There was a lot of back and forth there. So I think there will be a lot of questions about the impact on consumers. And you know, typically Amazon is a story that has to do less with retail and more with AWS. And we kind of got a preview of AWS yesterday with Microsoft. Okay, so that's some views on tariffs. What about the inflationary side of things? And that's certainly related to tariffs. How are you looking at about the inflation path forward?
I still think it's stubborn. You know, we still think it's embedded in there, and we would not be for the Fed cutting because we think inflation's still built in to the marketplace.
Where specifically? Because we're seeing a move away in oil prices. We're seeing lower oil prices. Where are you seeing inflation embedded? And why?
Well, basically, you're seeing the consumer spending. You know, they're telling you that the prices went up a little bit there. You're also seeing in the fact that housing, right, well, people aren't buying housing, but the cost of basically maintaining your home. You know, if you want to do repairs in your home, the cost of the wood, the cost of the products, we're seeing that as an issue. You're also seeing the fact of goods that are being bought are higher than they were. So the question really becomes is, if the consumer is anticipating higher rates or a slowdown, they pull back on the spending. So, well, yeah, you looked earlier about the cloud, but you look at the impact to consumer if they're facing day to day. You look at companies like Procter & Gamble that's telling you they're facing that issue with the products they're being selling. You know, that's the basics of what's happened to the home. So the inflation's still there. Yes, energy has come down a little bit. And yes, you know, if they say food prices, but still, when you look at it, the consumer is slowing down the spending. But is that going to be permanent? I don't know, because I can't tell you what we look like inflation. I think the Fed is too early to act. I think they need to be more patient, because what you don't want them to do is jump the gun, cut rates, and then you have the White House change the issue on tariffs. And next thing you know, you have inflation ticking up again. And I do think stagflation is a very big concern here.
All right. So, net, as you say, things can change, rapidly. We live it every day, every minute, every hour. Having said that, do you believe that things will settle at some point where higher tariffs, though, they're not the tariffs that they were, that there's going to be some higher level of tariffs and disruptions as supply chains, some maybe are brought indeed back to the United States, and things are changing that could ultimately lead to a very different investment environment going forward, a different level of profitability for companies here in the United States? I mean, what's the long-term game that you think might be very different for the investment environment?
Well, it's hard to predict the long-term game, because if you see
So are you saying it could just go back to the way it was before?
I don't think it's going to go back the way it was, but I
Okay.
think the market's reflecting disruption, right?
Yeah.
If you look at take out technology, the market's reflecting it. Consumers are reflecting it. Energy stocks are reflecting it. Healthcare is showing disruptions. And you have to ask yourself, what's actually being moved back here? I mean, what's happening really? Not what's being talked about, but what's actually being moved here. Semiconductors are getting exceptions, but you have to look at what's happening with Taiwan. So long term, I am bullish, but I think you're going to be choppy for the next 2 quarters. I think the second half of the year, as we get through this and really settle into what tariffs are really going to look like, and the companies have the ability to plan for it, and the consumers get used to what they have to deal with. And then you'll know where the Fed is. Do I think the Fed's going to cut interest rates to the fourth quarter? Probably. I don't want them to cut earlier, because that means the economy is really slowing down. But it's hard to tell. I mean, if you look at right now, they said GDP was negative, but that was a pull forward from all the imports. People were front loading that. So the question becomes employment. Employment, a lot of the problems that you just had was New York related, was a big uptick. But you have to wait. The economy's still strong, but we're seeing really good signs of a slowdown. I think the second half of the year, everybody will be more adjusted to what we're actually dealing with. And I think that's going to create an incredible investment opportunity if you can look longer than 3 to 6 months.
And we do know that you are finding opportunities, Visa, Waste Management. There's a couple companies that you definitely have been buying. So any market environment, there are opportunities. Next time, we'll talk more about the specifics of that. Max Wasserman, founder, senior portfolio manager at Miramar Capital, around $500 million in assets under management, joining us from Northbrook, Illinois, folks.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.